Yo, what is going on, investors? Welcome back to the channel. My name is Jason, and in today's episode, I'm going to break down 10 stocks for you that I'm buying in August. I'm going to do a couple minutes on each and every one of these stocks. I'm not going to do a crazy deep dive, but I'm going to tell you guys why I am buying each and every one of these stocks. Let's get into it. All right, investors, if you take a look at the screen right now, the first stock I'm buying in August is Warner Brothers Discovery. And it might not be because of the reasons you think. I do, however, love the IP. HBO Max is one of the best apps in this space, I think. And they also own a ton of IP like Superman and Batman. And they also have good movies coming out for the rest of the year like M. Night Shyamalan's Trap movie. They also have the new Beetlejuice movie coming out. And they also have the new Joker movie starring the one and only Lady Gaga. So I think they're going to have a good back end of the year. And as these articles suggest, Apple could be a serious potential player to acquire Warner Brothers, right? They're getting destroyed this year. They're down 40%. I own around 1,000 shares right now, and I'm steadily adding to my position. It dipped big after earnings because they had like a $9 billion impairment charge, and then losing the NBA rights is a huge disaster for the TV branch of this company. But a company like Apple, if they buy them, they're probably going to double the valuation to sell off these assets, right? So you're thinking about $14, $15, maybe even $12. And that's a considerable upside for where we're at right now. And they have such good IP. I think a company like Apple, it would serve them really well to potentially own Warner Brothers and the Discovery networks, right? All right, now let's move on to my next stock. It's Ford. Year to date, we're down 16%, right? But I'm buying the stock for the dividend, right? The PE ratio is only at 10, and the dividend yield is right around 6%. What I think is going to happen is, so now people in savings accounts are getting pretty good money. I'm a SoFi member. I'm getting like 4.6% because I have direct deposit through SoFi in my savings account. But as interest rates tick down, there's going to be a lot of yield chasing happening, right? So if you look over the last year, 5 years, I mean, the stock was up to $25 a share at one point and has bounced up to 15, a bunch of different times. Look, 16 here, around, where did it go? 14.50 there, around $15 there, and we had another peak around $14 there, and then this recent dip to around $10. So I think with that yield chasing and the stock kind of going around 15, we could see this stock in the next year or two between $15 and $20. And if you buy in now, you're getting around a 6% dividend on top of that. I think that's a win-win situation for investors, and that's why I like Ford stock right now. The next stock is Google, man. Google, they continue to be an incredible company, and to get probably the best company in the world, right? At a 23 PE ratio is insane to me, right? The 52-week high is right around $191. 52-week low is around $120. So selling some puts after this recent sell-off is what I'm doing, right? So it was peaked at around $190. So I'm selling puts in that $150 range for 2, 4, 6, 8 weeks out. I wanted to see where the sell-off kind of left us, but I think Google is at a really good valuation right now. I like this company. I just think it's definitely worth the bang for your buck, right? And if you look, I mean, quarterly they're still going up. I mean, look, if you look at the net income, 18, 19, 20 billion, 23 billion, 23 billion. So the net income is still going up on Google. They're continuing to be one of the best companies in the world. Here are the year-over-year changes from their last earnings report: 14% on revenue. Operating expenses only up 4%. Net income is up almost 29%. Net profit margin up 13%. Earnings per share up 31%. EBITDA up 26%. Google is an absolute buy at these prices, in my opinion. The next stock I'm buying is Amazon, right? After this recent dip, they're down. They were down almost 20%, a serious correction for Amazon stock. 52-week high around $200, 52-week low around $120. So again, if you sell puts in that $150 range, I think you're getting really good value. PE-wise, Amazon is a little more expensive than Google. So I definitely think Google, in my opinion, is the better buy, but you can't go wrong with Amazon, especially as we lead up towards the holiday season. I really like Amazon, guys. I think they're a very, very solid company. I don't see their earnings getting hurt at all whatsoever. I really, really, really like Amazon. All right, now the next stock we're going to talk about is DraftKings, right? They're down 10% on the year, but from the highs, they're down almost 40% of the year. 52-week low, $25. 52-week high, around $50. $30 is a really, really cheap price in my opinion. I love this stock. Let's check out their Google Finance page and see what's happening over time. And they just announced a ridiculous share buyback program, guys. If we look at the annual revenue, I mean, come on, guys, come on. 600 million, 1.3 billion, 2.4 billion, 3.6 billion, and they're cutting their losses each and every year. And another reason I like DraftKings is right now in California, you can't do the online sports books, right? At some point, California is going to fall and the profits are going to pour in. Just like look at these numbers year over year change, up 63% in revenue. Operating expenses are actually down 4%. Net income up over 40%. Net profit margin up 64%. Earnings per share up 87%. With this recent sell-off, guys, DraftKings is an absolute buy for me. All right, the next stock I want to talk about is JEPI. J-E-P-I. This is an ETF, right? So they pay a very, very good premium each and every month. So it's a monthly dividend player. The yield is around 7% right now. And I'm telling you, as interest rates go down, you're going to see a lot of yield chasing. People are going to start to pile into these stocks like JEPI. I can honestly see the stock going in that $60 to $65 range. And if you buy right now, you're still getting around 7% on your money. This has like a little brother named JEPQ. That's another good buy as well, guys. And they're paying a little bit more of a yield at 9%. It's a little more affordable at $51. The holdings are just a little more concentrated. That's the only real difference. The top 8 holdings, Apple, Microsoft, Nvidia, Amazon, Google, Meta, Broadcom, and Tesla, make up 38% of the total assets. So if these stocks see a considerable decline, so will the price in JEPQ. So I like these kind of ETFs, JEPI and JEPQ. And the next stock I want to talk about is HIMS, man. A 52-week high of $25 and a 52-week low of $5. So if you watch my videos and we're buying in that $5, $7, $8, $9 range, you made an absolute killing. I love this company. PE ratio is still a little high, but if you take a look at their finances, they're really, really good. I love this company. They're continuing to grow quarter after quarter, year after year. The numbers are just so good. Look at the quarterly income, guys. Each and every quarter, more and more revenue, more and more profitability on the bottom line. Annually, come on, look at that growth. Come on, come on. All right, this quarter, look at the changes, guys. 51% up in revenue. Operating expenses are up considerably. Net income is up almost 300%. Net profit margin up over 200%. EPS up over 200%. There's not a lot of companies in this market growing like HIMS and HERS, guys. And if you look year to date, they peaked at, like I said, around $25. So they're down 35% from the year-to-date high. I think this is a buy-in opportunity for HIMS stock. The next stock I'm buying, you might call me a little crazy for this, but it's Disney, guys. Disney had a 33 PE. I mean, they've been getting smoked over the last 5 years, guys. Look at this. They were up to almost $200 a share. They're down almost 60% in the last 5 years. And what is one of the most recognizable brands in the entire world? It's Disney. This sell-off is not going to last forever, in my opinion. Disney Plus, they're starting to figure out the profitability there with their streaming service. The parks are going to continue to do well. People and kids love doing the Disney stuff. And I just think this company will get back to a more profitable state sooner rather than later. If you look at their annual revenue over the last 3 years, it continues to grow. It's up over $80 billion. And then they had another profitable quarter June 2024, guys. And the net income up 600% year over year. Revenue is up 3% year over year. Operating expenses are down, which is always a good thing. Net profit margin up 600%. Earnings per share up 33%. So this company is starting to get on the right track. And I think this is the time to buy Disney. I just bought 100 shares of Disney, and I'm going to continue to add to my position. And the last stock I want to talk to you guys about today is Verizon stock. This is another dividend play, guys. PE ratio at 15, maybe a scotch high. If you sell puts in that $37, $38 range, get that PE under 15, and then if you get called the stock at $38, you're going to have over a 7% yield. And once again, as interest rates go down and you can't get the 4 or 5% in a savings account or your CDs, people are going to go piling into these dividend stocks. What were the stocks that held up the best over this recent crazy sell-off in tech over the last month or so? It was the dividend players. It was AT&T. It was Verizon. It was stocks like this that held up the best. And I think if shit hits the fan or interest rates go down very quickly, we're going to see some yield chasing into stocks like Verizon. That's why I'm buying. If you look over 5 years, I mean, the stock was in the $60 range. I think over the next 2 to 3 years, we could push back up into the 60s. Once we get there, we sell for, a 50% upside with, getting that 6 to 7% every single year on our money. I love Verizon stock. There it is, guys. There's the 10 stocks that I'm buying this month in August. Let me know in the comments below, what stocks are you buying? Do you like some of these stocks? Do you hate them? I would love to know in the comments below. We'll catch you on the next video. Don't forget to subscribe. Peace.